This week's been something special.
Hi, once again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling, and it's always a pleasure to have you with us as we talk about ag issues and agricultural markets. Well, on this Friday, I want to remind you, like these videos, subscribe to the videos by clicking the bell icon down below. That way we can let you know the next time we post another one, and share these videos with others as well. Today, since it's Friday, I have Relph with me, and of course, he is with Comstock Investments. We're going to take a look at how we finished the week on the ag commodity trade, and it looks like it wasn't a very good finish for the grains here on Friday. What happened there anyway?
Well, I think you've got just overly cooperative weather for a really swift harvest pace, and you're starting to see some of that hedge pressure come in late in the week. We saw a little bit of stumbling yesterday, but not too bad. And then today really struggled throughout the day. Wheat market was kind of a plaguing factor as well. That was led by the Paris milling wheat, down sharply in overnight trade. And I think there's a lot of concerns about Turkey's demand and is Egypt going to kind of reciprocate that sentiment? And so I think it may be a little demand pullback, but we expected something. I mean, you can't rally wheat 95 cents and not expect some kind of a pullback. And yesterday we're down a dime. Today we're down 15 cents. We're just getting started on what could be a healthy pullback, which should be more in that 30 to 60 cent range, not 10 or 20.
Well, I'm looking at the corn chart. We'll kind of walk through these here. And on the corn, it looked like we had just made our way up above, I guess that would be, what is that, the 100-day moving average?
Mm-hmm.
And traded above it a couple of days, and then it kind of faltered here. Is that proving to be too much resistance at harvest time here, or what do you think on that?
Yeah, that's kind of what I'm seeing. I mean, I can take a look at the December chart specifically, and you can see on the right side of this, we spent 2 days above it after poking above it 3 days ago. So we're Tuesday, we punched through it, fall back right to the 100-day. Wednesday, the low was basically the 100-day. Same deal on Thursday, but on Thursday you finished at that low, and then today spent nearly the whole day below the 100-day. So yeah, that's proving to be pretty difficult. Funds liquidated the vast majority of their short position, which is something we knew needed to happen. That's pretty much done now. So here we are, glut of harvest. Conditions are good. Combines are rolling hard. Everybody's going to go as fast as they can. And we're seeing the pressure from it late week. And you can see that Thursday, Friday, you're right back down. That's commercials hedging off risk for anticipated purchases over the weekend. All I can hope is that they overdid it again and maybe took on a little too big a short position here on Friday and need to resurrect some of that Sunday into Monday. So we'll see.
One thing that also relates to the corn, of course, everybody's still talking a lot about Hurricane Helene, all the devastation that it caused. It also just brought scads and scads of moisture across a large swath of the southeastern third of the U.S., let's say. And that went all the way up to, Missouri, I think, and even central Illinois, I believe. So I just wondered, longer term, is that helping the ag picture, or how do you look at that now?
A little bit of a mixed bag. This is something that I talked about in our morning video today with regards to the weekly drought monitor. And I'll just go ahead and pop that up here and show you what I was seeing this morning when I looked. What really cued me into it was I was talking yesterday with a producer in Ohio, and he said some of his neighbors had as much as 11 or 12 inches of rain. He was just off the cusp of the worst of it and only got 3.5 inches, which for him was perfect because his wheat's in the ground. And so he was really pleased with the amount of rain they got. But when I looked at this drought monitor, I mean, you can just see all the extreme conditions in the entire Southeast, from the Ohio River Valley South and from the Mississippi East. All the extreme conditions are just completely alleviated now. You get up and you still got a bullseye, and this week's on the left, by the way, last week on the right. You still got a bullseye over West Virginia and Ohio, but it's much smaller than what we were seeing a week ago. But also what kind of caught my attention was worsening conditions in the likes of South Dakota and Nebraska, as well as Kansas and a little bit into Iowa also.
So things may be shifting as we get toward the fall, and I believe that kind of coincides with when they thought La Nina would kind of come back into effect again, right? As we get the wheat crop in the ground.
Yeah, and one of the things I was pointing out in our premium video was, you know, this is the time of year when you can take fire insurance for harvest, and everybody's timing's a little bit different on that, but it's really cheap coverage. And I've seen the aftermath of what happens when you burn up $1 million combine and how difficult it is to get insurance to stand behind you moving forward. And especially if you're looking at switching carriers down the road or something. And so this is just something I was kind of throwing out a caution flag, like, hey, this is cheap insurance and it's good coverage. It's definitely worth considering. And I had a subscriber call in later in the morning and said that she was actually seeing smoke at every turn across the field yesterday in Nebraska. And so that really struck her because she said, I was just scared all day long. We even put a sprayer tank on the grain cart just to have close by.
It's interesting you bring that up. That is a very good point. And it's something that we used to get a lot when I was farming. Mm-hmm. Being out in the plains, it was always hot and dry anyway.
Yep.
But now that you mentioned that, I just heard yesterday I have 2 relatives out in that part of the country have already had their combines catch on fire. Luckily, they got them put out, but they were like this close away from the whole field going up.
Sure.
So that is a very good point. I hope everybody takes a look at that. All right, let's talk about soybeans. Haven't talked about them yet. And all eyes are starting to already turn towards South America. What's going on?
So by all accounts, and you can look at all the weather models, we're looking at moving into rainy season by the end of next week. Now, if that happens, is most of that dialed into the market already? Obviously, I don't know the answer to that. My suspicion would be that we're hesitant knowing that it could, and we probably catch more pressure if it does. I guess that would just be my gut feeling right now, and probably see some more downside in the beans. And I say that for a couple of reasons. One of them is the technical setup, and I'll pull that up here and take a peek real quick. I was actually noticing this a few days ago that we were kind of working into this pattern, and going back to some highs set back in June. We have kind of a top end trend line resistance and a short term bottom end trend line support. And we're just kind of grinding into this wedge or pennant formation here. And, with the lower trade the last 3 days, you've taken out a couple of moving average support levels. And I think if the rains do hit in Brazil and we see much downside weakness, we take that trend line out, then you're talking $10 for next level support. And then the lows in the 950s. We had one low back here at 955 and a quarter, another one at 955 even. So that would be your next level support. And I mean, none of us want to see it go there, but I think we were a little proactive in taking advantage of those 1050s and 60s prices and getting some aggressive sales done for this crop of soybeans.
And there again, you usually refer to that when you do your morning updates, right?
Oh, yeah. Yeah. Actually, all of our hedge recommendations come out in the morning Comstock report, and then we'll talk a little bit about it as well.
Just to remind everybody, you can get a month of that premium service for $1, just $1. Can't even get a cup of coffee for that anymore. So you might want to check that out. Might be worth it, especially this time of year. So, and if you look at a stochastics line or a pair of lines, you have a fast and a slow stochastics line. When they cross over, that usually means it's in a downward turn. And that's what it did here about 3 days ago, right?
Yeah. Actually, I don't know if I can pull that very easily, but I can sure try. Let's see here.
But I know the levels had both been pretty overbought. A lot of times they figure anytime you get over like 80 on those lines, it's getting kind of into lofty territory there. But anyway, anytime those lines cross, and I was real curious about that because that was a sign that we got a couple days ago.
So it was actually on the second that they crossed. And you can see here, I mean, we're just pointed straight down. We are still, in that 70 area on the stochastics. We're not in the overbought territory, but when you can see it can get down into single digits as we did many times back throughout the summer. And so if we're going to head for something like that, we could easily have seen the start of it here. And those oscillators are nice reference points. We look at quite a few of them. So
if that rain would come to fruition in Brazil, would that be a realistic target to look there at that low that we had back in August?
I think so. I really do. If the rains come through, and maybe especially if they're surprising in volume, if they get really broad sweeping, good soaking rains, and then they get that break, that's going to be a big deal too. You get that initial onslaught, you get that soil moisture, then you get the break. and then planting really accelerates. And if that all plays out like it could, especially in the state of Mato Grosso, because that's where all the focus is, that could create, yeah, we could go right back and test those lows. And I have a lot of people who sold soybeans right off the combine, just get them down, get them sold, be done with it, because we are here in this 1050, 1060 range. And depending on basis, you're still getting a decent cash level, and they're looking for opportunity to rebuy. So I think we're going to be underpinned a little bit, at least for a while, for those looking for some reownership on paper. But that's definitely within the cards. And some technicians are actually looking for a new low before we could then leg higher. So a lot to play out.
Well, we had a dollar gain since August, and I hate to see anybody look away from that and watch it go by and not do anything.
That's right.
Just something to think about.
Yeah.
Okay. I guess the longshoreman strike is apparently, what do you call it? Suspended? They agreed to a 62% pay increase or something like that.
Yeah.
And then it would only be through January 15th. And then they want to renegotiate again.
Yeah.
What do you think that all means anyway?
Yeah. So the way that I understand it is they're going to get a set amount of pay increase each year for the next 6 years, totaling 62%. So about 10% a year over the course of the next 6 years. And the money they've settled on, that's done. Now it's everything else. And the big deal is the longshoremen are fighting against automation. They don't want machines taking their jobs. And so they have these next 3 months to sort that out. And that was ultimately what this was. And so I guess whether you call it a pause or a suspension or a grace period or whatever, this gives them these 90 days to try to sort that out. And that's their big fight now. The money's done. Now, can they get rid of the idea of automation in the ports? Don't know.
And it's not lost on a lot of people that they just kick the can down the road to the other side of the election. So,
Yeah.
It's kind of funny how that all works out like that.
Yeah.
But it is kind of odd, though, to expect to tell a company owner that, hey, you can't modernize.
Yeah.
It seems a little weird to be able to do that.
Yeah. What if a labor union had told that to Henry Ford when he perfected the assembly line? I can't. Where would we be today? I don't know what that looks like, but progression, fear of the unknown, right?
Yeah. So I don't know. The owner is the one taking the risk on the enterprise and everything, and it just seems kind of weird. I don't know if that can really fly or not. Let's take a look at livestock here. I see we had a higher close on cattle on Friday. So where do they stand now?
I don't even know. This cattle market this week's been something special. I'd like to round up the CEOs of the major packers and have a little powwow and talk about this. But of course, I'll never get that opportunity. But it's interesting. We had some early cash trade on Wednesday, and you started hearing about it was, and I'm talking in the morning on Wednesday. You were seeing cash trade at the upper end of last week's range. By the afternoon, you were $1, $1.50. I even heard some as much as $2 higher than the prior week. So I expected they're gonna shake them loose here. They're gonna get some business done. Thursday, come out, nothing, no purchases, no confirmed cash trade. And looking at all the AMS reports, none of that higher end cash was ever reported. And so, I'm a firm believer in the USDA and we're like besties. And so I don't want to say anything too bad about them, but this is ridiculous. I heard firsthand accounts of 187, 188, 188 and a half, 190 cash going to a regional packer. I heard of a bunch of $300 dress being reported or being sold, and none of it ever shows up on an AMS report. And here we are 2 days later, still haven't seen anything. Reporting deadlines at 2:00 today. We still have only a handful of deals done prior to 2:00 or being reported before the deadline in Texas. And that's at $1 higher than last week. So everything that's official is going to be $1 higher. The board was like $4 higher. And now you have a board that's actually exceeding the national average cash price according to the AMS reporting. So I don't know what to make of it. It's ridiculous on the cash side this week. But from a future standpoint, both feds and feeders performed really well this week. You're up like 20 of the last 22 sessions. It's just been ballistic, and there doesn't seem to be anything standing in the way. Box beef's been kind of sluggish, and that's been a bit of a drag. And then today, all of a sudden, you have choice cuts up 275, select up 3+. Just a really nice day in the box beef today. So that makes you think, okay, well, if we've turned a corner on the beef, then the cattle could maybe have a little room. But I'm also cautioning, while I say all of that, that's supportive of the cattle. There's some key things to look at here as well. Pull one of them up here. I noticed this I think it was the November feeder cattle. So on the major move from the July 1st high, or that first week of July high, to the first week of September low, you have, I put a full retracement on that. Your 62% retracement hit right at this opening gap level from back on August 1st. And that number was 49.76, 249.76. Today's high in the November feeder cattle was 249.65. We're right up against 100-day moving average at 249.50, 62% retracement at 249.76, and an opening gap level from back on the 1st of August. That's thick stuff mounted up in that same spot right around the psychological 250 mark. And so there is cautionary concern, but today looked pretty good. And the week overall, I mean, you were only up 2 out of 3 days, but you still made a $4 move on the week. So pretty impressive stuff.
So what was the deal on Wednesday? Why the big move on Wednesday?
That was a huge head scratcher for everybody. I mean, I had people texting me, I'm texting other people. We're trying to figure out, like, what is going on here. And the only thing we could figure is we were hearing about that reported cash trade that I told you about that never actually came out on any official document. So we're thinking, okay, so we were 187 on the top end in the north last week, and I was hearing 188.50, 190. I'm like, holy crap, we're going to be $2.50, $3 higher this week. And then we never see it from the USDA. So kind of faded out as the week went on. But we thought that we were going to see enough volume again to set that market. And then Thursday, nothing, and we never saw the reporting.
Well, live cattle and feeders almost look parabolic right now. But they both seem to be getting really overheated too on the technical.
Extremely overheated, and I do feel like, as I'm sitting here, I'm mentally collecting a list of people to talk to later today, when the LRP quotes come out at 4:30 this afternoon. And so I wonder how much hedge pressure we will run into now that we're back up into the consolidation ranges that we were seeing a few months ago.
So I'm seeing a weaker trade on the lean hogs heading into the weekend here. They didn't do very much. I mean, it wasn't down a lot. But there again, you look at a lean hog chart, and they have come so far in the last month and a half or so. There again, it seems like it's overheated, isn't it?
Yeah, extremely. And especially when cash isn't keeping pace. I mean, early this week, it looked like maybe we'd have a chance. You saw some decent volume, a little bit of higher trade, and you had some things to talk about. And then Wednesday, it just fell on its face. In the last 2 days, we've had nothing. In fact, today we had no comparison in the early traded cash because there was such a light volume. There was only a handful of deals done, not even 1,000 head in the negotiated market. So if the cash doesn't come around, the cutout doesn't light some kind of fire. We're coming into the tail end of BLT season here, and everybody's getting ready for winter. And so it's, I don't know. I don't see what's going to carry it from here in a market that, like you said, is really overheated, well overbought, needs some kind of corrective break. I think we're going to uncover some hedge pressure here. And I've thought that for the last couple of weeks. We've continued to move just inch higher and higher, but we're at the upper end of the range I thought we could get to. And I suspect we will find some pressure here.
Back on the cattle, I can't help but wonder, we had that jobs data that came out. Far above expectations on the jobs numbers.
Until they revise it in a couple months. Yeah. Go ahead.
And a lot of people were going, oh, come on. But I wondered if that helped to support the cattle trade at all.
I'm looking at stock futures at 826 this morning, and I'm thinking, the cattle are going to shoot out of the gate. And they didn't. They did come out, opened up a little bit higher, 30, 40 cents higher, and then actually traded in the red, while the stock market's still holding up at the highs of the days. At that point, you got the Dow up something like 300. NASDAQ was up over 200. The S&P was up 40 some points. Nice gains in the stock market because of the jobs data that had come out an hour earlier. And they just couldn't hold it. Right off the open, they started to fade. And so I thought, well, we're going to see profit taking in the week and then see where we're at come Monday. That wasn't the case either. We finished right up at the top of the range. And so I don't know how much of that was the stock market influence, but lower grain and higher stock market usually equals higher cattle.
Value of the dollar was higher. I was kind of surprised to see, that at the same time as a higher stock market and also a higher crude oil market, even though it did trim its gains toward the end of the day there. But
Yeah,
I thought that was a little unusual too, wasn't it?
yeah, I'm sick of the dollar. It needs to back off. We got down there close to par for like a half a second this week, and it's just been straight up ever since. And we really need that to break back. If we could get that, I mean, we had really impressive pork sales last week, really impressive beef sales. Our grain sales last week were spectacular. The dollar was right around par last week. So that should get people thinking a little bit. This could really make a difference if we could break that thing 3 points and hold it below par. We could be doing a lot more business. Of course, it doesn't matter if you can't ship it, but I think we got that figured out too.
Well, as we get ready to put a bow on this here for this week, anything earth-shattering coming out of field reports as far as like from your clients or anecdotal reports for yields?
You always have the stories, right? The one-offs. And whether it's good or bad, you always have those. And I can tell you about one person who was wishing they could take prevent plant because they knew they weren't going to make a crop, and wound up at APH here in Northwest Iowa making 240 bushel corn, where he really wanted to take prevent plant because he just knew he wasn't going to make a crop. So you have things like that happen, like, oh my God, I can't believe it's that good. Then you can talk to his neighbor 3 miles down the road, and they're going through soybeans, and their APH is 56, and they're running through the beans 35 to 55, and then 5, and then they're not picking up any beans, so they're 0 for a little while, and then back to 5, and then back to 35. Corn running consistently 14, 15, 16%, and then all of a sudden 22, 23% in the same pass. And so there's a lot of that kind of stuff going on. But generally speaking, from a yield standpoint, I'm going to say the Western Corn Belt is going to be a little disappointing once you get far enough north. Missouri, spectacular. Southern Iowa, spectacular. Northern Iowa, South Dakota, a big chunk of Nebraska is going to be a little disappointing. Minnesota, the Dakotas, they're just in that, well, I wish kind of category. It's not terrible, but I wish, right? And then I think your Eastern Corn Belt is going to be the other way around. Just, it's either going to be really good or unbelievable.
Yeah, that kind of agrees with what I've been hearing here as well. Well, Eric, thanks for all the information. It's good to hear from you again. Best wishes for a good weekend. And again, I want to encourage everybody out there viewing, if you have some crop yield reports or condition reports, feel free to drop them in the comments down below. And it's always interesting to hear everybody compare notes about how things are doing in different regions of the U.S. So put your comments down below and weigh in. Thanks again for joining us. For producer Brianne Hendrickson, I'm Marlin Bohling. We'll catch you next time right here on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget, you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.